Do, 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 do. Man, SMCI is just settled in there. Oh, let me go to YouTube, and I'm going to monetize this. Wah, wah, wah. Watch the Olympics on NBC Universal. Buttigieg. It took me a while to say that name. Buttigieg. I used to say butt. Content. Live. I'm late, so people are probably slow to get in here. Good morning, Joe, Chris, Laurel. On, and then we're gonna boom, boom, boom. The reason I'm late, morning, John. I was literally on Earnings Hub saying, okay, what's good for today? What's good? Monster Energy, which has rebounded a little bit today after the close, reported 42 cents, expected 45 cents, so they're expected to grow. I was looking at some of the chart stuff. It's interesting. We can go to the 4-hour here. Well, I got to get a new computer. I don't know what ACMR is, but and listen, you know, if you have SMCI and you're in the 4-hour algorithm and you're trading with it, you're out. But it's down 12%. Nobody believes the forward guidance. That's the issue. Nobody believes the forward guidance and their margin pressure. But let's see. We did that. I'm not going to show Savvy Trader. We got Trend Spider. Back to regular prices. Hopefully you guys got that one. I've got a message in there. Fortinet. Here. This last night. Oh my God. I was on Spaces and I was looking for some stuff. And so I wrote down some notes while I was on there, and it was at 3:00. And this was the note that I had on there, Chris. Fortinet earnings are interesting to me. It's been dead money for a few months, but it does seem to get to the 50s level and then bounce back to 70s, and earnings could be that catalyst. Now, I have said this before, and I've pointed this out. I have traded this name. My dad owns this name. But when you look at the weekly on this one, look at that range. Now it's up 15% to 64. You're getting close to that 70. I think that's the catalyst, and that's where you trade it. It was interesting. I mean, it's super, super just, I could kick myself for not doing that. But what else did I post last night? SMCI, by the way, it boomed, 20% when they announced the split, 10-for-1 split. But, yeah. We got a couple of things off of Twitter that we'll go over, so I don't think that's a bad play at all. I mean, you know, what's it, $5 a share? You're going to take that? I mean, that's a great trade right there. Great trade. I think that's fantastic. These calls are going on right now. Shopify's going on. Disney's going on. CVS is going on. Lyft is going on. Lyft. Let's talk about, you know, Lyft and the difference between the two. Okay. We've got that opened up. Let's see. We're going to open up. First, we're going to do some scans. Market scanner. Scans. TSM, Uber in the core portfolio. Whoop, whoop, whoop. Let's see anything in my personal portfolio that's different. Occidental Petroleum's interesting. I got a whole list of stocks. Let's see. PanW's up 3%. I mean, God. Morning, Mark. Shopify. Did I get this wrong? Did I get... I mean, I didn't sell it. I'm still holding it. But that's popping 20%. The chart just looks so freaking ugly. It just looks, I mean, it goes back to show you, a good company with good management. They'll do fine. Did Bitcoin rebound yesterday? Let's see if we got a scan in there. I got a lot to go over. I got some social requests. We've got earnings. Let me see if I got. We'll go to you. We'll go here. And I still don't get an ad. Oh, well. Man. Like, Spotify plays ads on all my stuff incredibly. But YouTube, I make, I think $40 a month off of YouTube, something like that. Whereas I'm making, $500 a month off of Spotify ads. I mean, I get a ton more daily listens on Spotify than I do on YouTube. So it makes sense, but God, this is just, something's up with this. I'm going to log out and then log back in. Something's slow with TrendSpider. Okay, we're going to look at this one. Then we're going to look at Bitcoin. Bitcoin and ETFs and crypto. All of crypto. I didn't unlock my watch. Why the hell was that not unlocked? YouTube, you are now live. Whoop, whoop. James Ford's a TrendSpider affiliate. Whoop, whoop. Whoop, whoop. Insane Clown Posse, shout out to all the juggalos. Someone's curled up on a chair over there with doing gymnastics in the chair in the office. God, why is... Yeah. I don't know why it's doing this. It's slow. Let's see. I'll go over kind of what we're going to talk about. I got social requests on SPY. Dell. Thoughts on Broadcom, SYM, I don't even know what it is. LTH, Lifetime Group. Don't know what that is. I also got an email, which is really, really well written, about SMCI from William. All of the earnings: Sound, Trading Desk, Lilly, Sedge, IONQ, Sonos, Frog, Clavico, KV, I think that's how you said, Duolingo, Hood, Dutch Brothers, Bluebird, App, Lovin, Hubs, Google, Oxy. That's all for today. We'll go over XLK. Why XLK is like wacky? Because of the rebalancing. That's essentially, it's going to be an issue. NVIDIA, the Mag 7 stocks month to date. AMD, chip prices, they're raising prices. Biggest movers of the day. Lyft versus Uber, Shopify earnings, Disney earnings. Super Micro. And Scott had mentioned that I said SMCI was lowered from a strong buy. I want to show you on Seeking Alpha how you set those alerts. And a stock that, we got a sell on Dino yesterday from Alpha Picks, so I'll talk about that one. The Mike Santoli's Mystery Broker as well. That's a great series. And he went over yesterday that the Mystery Broker is buying, which is a pretty damn good sign. This is the dip. I guess people are buying the dip, but we went over it. I went over it in the paid newsletter how last summer, last fall, summer heading into fall, we got 3 8% moves back. So it's a little bit. I think the reaction is SMCI is an overreaction. I'm not buying more until it tells me to buy more. But the valuation makes sense. Again, if their guidance is correct, are they just, being too optimistic? The margins were taken down. That's probably why Dell's going down, because they're assuming that, hey, we're in a pricing war. And it's a commodity. I mean, it's a server rack. Let's be honest. How much can you put in a server rack that, other than a couple of pieces of metal? But the way it's set up is fantastic. So I trust Dan Ushman from TrendSpider, who said he had a business where they were loading up data centers, and it was all SMCI racks. And he said they are by far the best ones out there. So here's the XLK. Here's NVIDIA. Gains as new research upgrades. I can't tell you enough. I think that one's a buy. Magnificent Seven, how they've done. AMD, their new processors, cheaper than its previous generation chips. They priced it cheaper, which kind of, hey, red flag. Biggest movers of the day, we'll go over SMCI Lumen. Upstart with a shocking beat. Shopify soared on earnings. We'll go over that chart. I think today's going to be a heavy chart day. Less on actual kind of stuff. This from Jenny Harrington yesterday is just a morning, Scott. This is just a masterclass on the value of stuff. So I'll show that. And Dino, we have a sell, and this is the Mystery Broker stuff. And I did want to take a look at SPLV. SPLV. Because this is the low volatility index. Berkshire Coke. This is an interesting one. This was traded heavily yesterday. They don't show volume. SPLV. Let's go over here because we'll look at leveraged ETFs. We're going to continue this. Spider sectors. Nope. We're going to do the watch list because I know there's some stuff on the watch list that crossed. There's got to be. It's too good of a watch list on a day like yesterday to not have it. I don't even know what happened with Lumen. Let's see. It says here. I thought Lumen was in here. Upstart, Supermicro, Airbnb. Oh, there it is. In pre-market trading, building on a 93% surge, while Lumen lowered its adjusted EBITDA, it significantly boosted its free cash flow projection from $100 million. The optimistic outlook follows the company's recent announcement of $5 billion in new contracts driven by advancements in artificial intelligence, coupled with potential $7 billion in additional sales. So, whoa. David, China. I didn't know China allowed me. I thought with my political views, China might say, ooh, we don't like you. We're going to censor you. But, oh, well. I'll look at SMCI. I'll go over SMCI. I'm not going to ignore you, David, but I am going to wait until I record the podcast for that one. Just because it's going to be like the third story that I kind of go over. After I do my advertisements for everybody. Morning, Daniel. I'll go over it in good detail, though, as to where I see things going. I don't like the market reaction. I don't like the chart. I think we've lost what we've done. So in real time, I don't prepare a lot of stuff. So in real time, I'll be looking at stuff. Yeah, Dave definitely got a VPN in there. But I thought China shut down most VPNs. I thought they didn't allow VPNs. I don't know. Last time I was in China was 1993 at the Great Wall, where a woman chased me with a paperweight replica that I have around here somewhere. I have to find that. I thought it was over there. Because I have a Taj Mahal, I have a Machu Picchu, and I thought I had the Great Wall. Kudos, David. Or else I would be blocked. I mean, let's be honest. You know, Motley Crue is on Spotify, so they're not going to like that in China. And that intro song, just so you know, David, that was AI. When AI first came out, I think it was like November of 2022 or something. Somewhere in that neighborhood, I basically, you know, somebody said, hey, you can have a AI write you a song. And so I went onto AI. It's a Discord server with AI, and I forget which language kind of did it. But I just said, hey, let me get a song here, and I wrote in that I have a podcast. I forget you were there, Maya, weren't you? Mm-hmm. What did I put in? Podcast, newsletter. I think I put in keywords: podcast, newsletter, and daily stock pick. Boys band. Charting. Yeah, it was a boy band. I think it was pop punk boy band was the style. It's a good, I mean, listen, that shit gets in your mind. It lives in your head. After you edit a couple of videos on with that thing, it lives in your head. I'm doing scans, by the way. Just I know I'm losing a bunch of viewers. They pop in and then they pop out. But I'm doing scans. ASML. Oof. ASML. That's been one that I think has been beaten down. Yeah. That one is just, oof. That's interesting. Let's look at the weekly on this one. Below its 50-day? Beaten down after earnings. Below 50-day on weekly. ISRG. Let's go to S&P.
People may not know that you're going to talk about it on podcast later.
What?
Like the structure, YouTube and then podcast.
Oh.
YouTube people don't know that. So when they show up earlier, you don't do anything but scanning. So maybe that's why they...
Yeah, they're leaving. I don't know. They could be having, maybe they're in China on a VPN like David is. And China's kicking them off. Who knows? I heard Kim Jong-un is a big fan. So he's listening. My haircut is designed after Kim Jong-un. Okay, nothing in the S&P 100. Wow. Wow. Okay. Yeah, if you get TrendSpider, you can do this on your own. It's just a little slow today, and I think it's my computer. But see how it says enter at 8:58 right there? That's what I'm looking at. Occidental Petroleum is up 2%. I mean, if you don't get this one where Buffett is buying it, come on. Yeah, David, I never had the balls to be an expat, but I've traveled the world and always wanted to, but never had the balls to do it. So kudos to you. Okay. So I've got everything opened up. SPLV. This is funny. Okay, here's what's great about Seeking Alpha is you can take a look at this. SPLV, think twice before you buy this low volatility ETF. Change. It's up 2.42% versus the S&P is down 1.88. That's how you know the Sunday Investor. You don't listen to the Sunday Investor. On October 2020, I recommended to avoid the Invesco. Yeah. And suggested iShares MSCI USA minimum volatility was a suitable alternative since this article was published as lagged behind. Okay, that makes sense. Okay, now it makes sense. He's suggesting something else. That makes sense. So we don't throw him out with the bathwater. We don't get rid of him just yet. Let's see. Jim Cramer's on. The hubris. Morning, Alexander. It's degenerates. It's the degenerate crew. Intel passed on OpenAI. If this doesn't scream. Did it? Hold on. I didn't get it in the scan. Did something miss up? Yeah. Son of a bitch, you're right. Why wouldn't that show up in the scan? Something happened. Hold on, we gotta go back to scans. It should have shown up in there. Can't all be perfect, but I mean, this is a screaming buy. Unless they're going to do something crazy, like take a write down or something like that. I don't know. But that's a screaming buy. Uber and Taiwan Semi are the only ones that are showing up. Yeah. Some reason it's not picking up Eli Lilly, even though you go back to Strategy Tester. That's why you have the alerts. You take the entry of the 4-hour algorithm and set it up on alerts with stocks that you want to buy. Now, would I buy this? Ooh, the entry is at 803. We're trading at 779. It's down 1.72%. Why is Lilly down that much? Is there any news on it? It's because of AMZN's results, probably. However, Benzil increased its price target to $3.35 per share and noted AMZN is looking to become a potential third entrant to the obesity drug market dominated by Novo and Lilly. Now, AMZN's chart, AMZN's interesting because I pointed this out way back before. I think it was around here in April when it was 276, that this was the next drug company, the obesity drug. It's down 1.8%, but Larry, But that's an interesting one. Let's see if there's anything on FinViz that kind of catches my eye. Nothing. Okay. We're going to go back to the Qs. Yeah, listen. I mean, I'm no genius when it comes to this stuff, but seasonally, when you look at, I mean, let's look at the seasonality of QQQ, and let's go back to, that's 2015. Let's go back to 2010. I mean, that's 14 years. You go back to 2010. Look, August isn't good. September isn't good. October's decent. It's not a bad month. I mean, that's kind of in the top 6, top half. Then you got November, which is killer. So then you're going into December after an election, January, and you can change this, exclude periods. You can change this and just do it for election periods if you want over the last 25 years. So it's it's an interesting one, but okay. I mean, that drop there, I kind of, middle of July, I said, hey, we're heading into August. This one might be a little bit. And July did not do well. July 1st, let's see, where'd you start out? You started at about 480. I mean, let's just say 480 was where you started. July 31st ended at close 471. So it was not a positive month. But that slide right there, if you were in TQQQ or anything, that slide right there was pretty clear that, hey, it's screaming get out at 490, 4, you could have gotten out before 480. Okay. Let me hit record. I'm going to start because it is 9:10. Good morning. It is Wednesday, August 7th. Doesn't it feel better to wake up on a day after it was green? I wound up losing money yesterday. Honest to God, those swings were crazy yesterday. I was pointing out I was on Spaces yesterday. I'll be on Spaces again 3 o'clock today to go over earnings. So if you're on Twitter and you want to follow me, I try not to speak up. Good Lord, these people love to hear themselves speak. That's what I told Wolf and guys. I said, I'll come on there, but I'm not staying for an extended period of time because they love to talk. Oh my God. I know I'm one that loves to talk, and I do an hour, an hour and a half every morning on YouTube. I get enough of my own voice. I'm pretty silent. By the time I'm done with this, I'm wiped out. But the Qs. So we had a good day yesterday. Yesterday's morning candle was a 1.92% swing. That's crazy. The afternoon, not so good. 1.36 down during that time. We're still moving down on the Qs. Make no mistake, the pre-market, you're up 1.48. This is the same as yesterday, where we might wind up a little bit higher, but the afternoon might be a little bit weaker. You can see the volume in the afternoon decline. That's not unusual. Typically, you see higher volume in the morning. Things are good, but again, you can't time things and say a reversal. So you had the catalyst of Warren Buffett selling his Apple. You had the catalyst of Japan, the unwind trade. You had the catalyst of people screaming for the Fed to do an emergency meeting because the freaking stock market went down. Those have subsided. Okay, so we've had the reaction to that was Monday. Then the overreaction was Tuesday. And that was the bounce back. And what you saw yesterday in the late selling into the close of the market was not good. Even though we're up today, mind you, it's because of earnings. There's a lot of movement on earnings. We've got a lot to go over. SMCI earnings. We've got a lot to go over on Shopify earnings. Lyft versus Uber. Just a complete divergence there between the two. But we'll go over all of that. I want to start out with Mike Santoli yesterday. He has this series called The Mystery Broker. And The Mystery Broker is it's a broker. He doesn't disclose who it is. But The Mystery Broker, who called for a 10% correction July 19th, issues a tactical buy for the S&P at 5,200 this morning, playing for a short-term bounce for now. Not an all clear, says, but will most likely need a retest, his initial correction call. He called it on July 19th. So where were we on July 19th? July 19th was up here. We were at 480 on the Qs. That's right where July started. So it made a complete reversal. He called it. If you got out of 480, kudos to you. Because right now in pre-market, you're at 445. You closed yesterday at 439. That is an enormous savings and a great buy the dip. Now, what he's saying is it's not a complete reversal. I have always said this. In order to get a complete reversal, I think you need to see the VIX first off get down below 20. Right now, the VIX is at 26, 23. So you need to see that below 20. And the other thing that you need to see is a catalyst to move up. You need good news. Some of that's in the earnings. Some of that's in, the earnings that are coming out. But a lot of this is single stock moving. It's still nervousness. Now, Alpha Picks had a sell yesterday on a stock called DINO. I tell you all the time, Alpha Picks, their picks are actually holding up. Now, DINO, this is HF Sinclair. I have no idea what they do. The time has come for them to do it. HF Sinclair was added on December 1st, 2022, and has remaining a hold rating for 180 days. So if you look at December 2022, this was about 58. Looks like this was one of the losers. Again, it's not all perfect, but they wind up taking out. How do you get Alpha Picks? It is a phenomenal portfolio, 132% versus the S&P at 46%. It is outpacing that. It doesn't have 100% winners. There is no portfolio out there. If you got a portfolio with 100% winners, I'm calling you a fake. I'm calling you one of those hillbillies who are on the internet talking about, oh my God, I make all perfect moves. No, we all lose. We all lose some. You win some, you lose some. But Alpha Picks just has that performance that I love. 132% versus 46%. They 30 stocks, something like that. A lot of them I've never heard of. I've never even thought about. Sprouts killed it. Abercrombie and Finch, SMCI. Those are some of the names. We'll go over some of the other ones. But they did have a sell on Dino. And so I wanted to make sure anybody who has Alpha Picks knew that there was a sell on that one just in case they want to sell. How do you get Alpha Picks? You go to this third link. linktr.ee/daily stock pick. It's the third link. And I save you $50 off of Alpha Picks. You get access to the entire portfolio on day one. It's 2 data-driven stocks per month. We just got a new one on August 1st. It's the 1st and the 15th of every month. They tell you when to buy. So this is not a daily kind of, oh my God, you're going to get alerts. You are getting portfolio analysis pretty weekly on this point. You get the alerts to sell, just like with Dino. The stock picks cover multiple sectors, access to it all on day one. It has the reason I'm an affiliate of this is because there are people who just want to buy, or there are people who want ideas. There are people who don't want to get in and out. They listen to me for some macro stuff and they just want something handheld to them. Or if you don't know fundamental investing, that's what this is great at. Alpha Picks is fantastic at that. They give you a full page description of why they buy and a full page description of why they sell. And that's exactly what a lot of people want. So Dino had a thing. Now, one of the ones that is an Alpha Pick that I saw yesterday, Royal Caribbean. I'm not going to tell you the date that they picked it. They picked it earlier this year. So it's been 3 months, so I'm allowed to talk to it. But Royal Caribbean, they picked it 3 months ago. Now, this one in the algorithm, it still has you out. It will get you in soon at 150. If you look at this one on a weekly chart, again, most of the Alpha Picks, you should be looking at a weekly chart. And if you look at this, we started the year at about 119. You're at 150. You got all the way up to 173. It's a fantastic one. They got a bump up yesterday from a JP Morgan analyst, labeled it best in class among the cruise lines. If the consumer is weak, nobody has told Royal Caribbean. Simple as that. Again, Michael Santoli's mystery broker is saying, hey, we're looking for a bounce. We're not looking for an all clear. Now, Jenny Harrington, one of my favorite traders on the halftime report. I love her. She is a value investor, so she doesn't fit my style, but you have to listen to these people. So want to know what I think about where the market goes from here? Back to where I started the year with math. She is giving you a master class on how to figure out the price of SPY. It's the S&P 500, but you just move the decimal point to the left one, and that's the price of SPY. Okay? She's saying 18 to 19 times seems like a fair or generous market multiple. $244 is likely the earnings of the S&P 500. Again, most of these analysts have huge models that take those 500 companies, they estimate out earnings, and they get that $244. So if you take the difference, 18.5, okay, PE, the multiple, and you say they're making 244, the S&P would have to be at 4,515. That's 451 for SPY. That would be down 13%. Stocks, sectors, strategies that didn't run up to 20% for the year and don't have stretched multiples are likely to be insulated because valuation always matters. Understand, she's a value investor. And we talked about this on Monday and on Tuesday, and I'm going to continue this. There are certain multiples that are levels based on growth and PE, and we are dangerously close to going down to those levels. And when you look at this, the market is up 62% in just under 2 years from the October 2022 lows. Okay? We had October 2023 lows, but they didn't come down to the 2022s. Now, when you look at Jenny Harrington, she says 4515. Okay? Where is that? 4515 is way down here. That's below the 454 that I outlined in the newsletter. And the newsletter is free, by the way. If you want the newsletter is free, dailystockpick.substack.com. Or you can go to the Linktree. It's down here if you can't remember that. Just remember Linktree. All the links are on Linktree. It's down there. But that would be an enormous move back. We closed at 522. Right now, the SPY is trading at 528. Again, Santoli's mystery broker. This is how you put information from the market together. You don't listen to douches on the internet, but you put things together and you say, okay, I want to make an educated guess about the short-term market. That's all you can do with charts. Charts don't lie. They will tell you long-term, they will tell you short-term. So we look at short-term, we see the MACD is super low. We see the RSI is down at 36. The market may be oversold. We're under the 200-day on the 4-hour. The 50-day just started to turn negative. These Bollinger Bands are wide open. They have to cinch up. We were trading below the Bollinger Bands for this week. That's crazy to me. Below the Bollinger Bands on SPY, buy it. Buy it when it starts to turn around for a bounce. It doesn't indicate that we're out of the woods yet. Those multiples and the growth are what's going to drive this market. And the reason I say that earnings are driving the market is because if those earnings are taken up in the S&P 500, then you can get those multiples even higher and you could push forward even higher. But until that happens, you've got to understand 62% in 1 year and 9 months. It's a little nerve-wracking. So if you're losing sleep, I am not selling. I am not pulling out. Again, I've said it before. I am not the best protector of capital. I from my own personal portfolio, I am not a great protector, and I've said it. And I know people on YouTube have heard me say it because they even quote it back to me. They're thinking that through October we might be weak because when you look at this weekly on SPY, okay, we just looked at the 4-hour. Yeah, the MACD was well below the oscillator, and it looks super good. But you've got this thing 15 points above the oscillator on the weekly. You could still see some softness. I don't want anybody thinking that, Shopify's up 20% to 18%. SMCI is down 14%. Taiwan Semi's up 5%. These are just small moves because if we are to go down bigger, then those are going to take the staircase down. Okay? The math is very, very simple. Now let's talk about SMCI. Scott Shipley from Facebook, he said, so glad Gary mentioned Alpha Picks had a lower SMCI from Strong Buy. I don't know a lot, but sold half of what I had. Great move. As of now, it's 13%, down 13% in the market. Thanks for the heads up. Well, what can you do if you have if you sign up for Seeking Alpha? Okay, sign up for Seeking Alpha. You can set an alert for SMCI. You can set an alert for SMCI when you want. You click this little the little bell up there. You can say it triggered. You can say set a new alert right here. You can do it based on the price or the rating. So when the rating goes down, it will alert you via an email or text message. I forget exactly. Yeah, email or mobile or both. So don't rely on me. If you've got Seeking Alpha and you've got these stocks in your portfolio, set that alert. And that's the benefit of Seeking Alpha Premium. And so if you go to Linktree, Seeking Alpha Premium, I save you $25 and you get a free 7-day trial. So every newsletter article that I'm going to go over, a lot of them are in Seeking Alpha. You get the analysis. You get everything. Plus, you get a $25 coupon off and a free 7-day trial. In-depth analysis. It's an amazing, amazing tool. I did this, TrendSpider and Alpha Picks. They're the 3 things that I sell. They're the top 3 things on Linktree. And those top 3 things are things I personally can't live without. So again, you can set that alert. Now let's talk about SMCI. We're going to get out of Jenny's here. Super Micro slides on mixed results despite strong guidance, and they unveiled a stock split. It is down 14%. They announced mixed earnings. It popped like 20% when they first announced it, and that was most likely because of the announce of a split. I've said it before that they just had too little shares for an S&P 500 company, that I thought they were going to do a split. Poorly timed. It seems like desperation. Analysts were expecting the firm to do $8.14 per share. They earned $6.25 per share. They did meet revenue at $5.31 billion. But the problem is, it's priced to perfection. And when we look at the stock chart, I said yesterday, the stock chart just doesn't look good. And I don't think that it's trading like it was. So what's the move here? Well, I like that stock split. I like this one to continue. The margins were a large part of the issue. And when you look at last year, for the last couple, look at August, July through this, it was a sideways trade. What are we seeing now? We're seeing a down trade. Last year, the 9-day never crossed the 21. Okay, it looks like it bounced off there. We just had the 9-day cross the 21 yesterday, and that was on a good day yesterday. Today, you're going to get even down further. It's going to be at 538, which is right at the, 538 is right there. Okay, there's no man's land here. Look at the volume. If we move this volume level, let's move it back here to August of 2023. Where we started buying this one. This was where, hey, there's a gap here above 300, from 300 to 350. You're going to fill that gap. That was where I started buying this. Now we're at 533 right now. I have a couple of buys here at 1,000. Do I think this one's getting up to 1,000? No. But when you look at this one and you go to the actual, the valuation of this, it's not crazy. The market doesn't believe the forward guidance. And that's the problem. You've just got a messy quarter. The valuation, C+, I'm sorry. When you go and look at this, the PE extended at 28. The forward PE is not. It's at 18. But again, that's based on their estimates. They're not lying. But the street says, no way they're going to do this. And the PEG is 0.38. The trailing 12 months is 0.4. Those are significantly lower than the street. But when you go to the profitability, that's where you're getting dinged. The profit margin is 15%. The sector is at 49%. The levered free cash flow, they're losing 18% because they're investing so much in their business. That's the problem with this stock. I don't expect this quant to change. I don't expect Alpha Picks to all of a sudden issue a crazy guide that you should sell this. But this chart right now doesn't look good. And for it to be down 13% and for them to issue a 10-for-1 stock split, remember, stock splits mean nothing. Absolutely nothing. When you can buy fractional shares, they mean nothing. They used to mean a lot. Am I worried about this one? Yes. The profitability is a D. The momentum, it's still an A. But when you look at this, the 3-month performance, you're down 25%. 6 months, you're down 10%. 9 months, you're still up 144%. I'm still up on my buys from last year in August. Okay, 1 year, you're up 82%. I'm still up from 1 year ago. The problem is the short term. And so what am I doing with this? I am probably going to take my lumps, get my money out, and look at different places. But we've got a reset of the MACD. The problem is, again, you've got competition from Dell and HPQ. And Dell is even down today. Dell is down significantly. So I don't like this. I don't like it at all. It's just, it's painful because I do think that the valuation deserves the higher multiple, but they've got to prove that they can do that earnings per share. I think it was just taken down because they're spending a ton of money. So that's hard. That's hard. Now, another one that just reported from the core portfolio, Disney. They combined streaming profitability earlier than anticipated. If that's the headline and they're just making money, they're not doing well. I mean, that's a bad one. If you look at Disney, they're down 3%. Look at this stock chart. This is just ugly. Now, I do convey that anything under 100, I think is a buy for long term. Okay? Long term. We're not talking within the next couple of months. We are going into a seasonally weak period. If you look at Disney for the last 15 years, okay, August and September are super weak. Then you get to October and November, stronger. So in my mind, I think you want to buy during these weakness times and then sell when you get to a strong time. And I would say that 100 is your target. But when you look at Disney's valuation, it is extremely extended still. Extremely extended. They have to start making more money. They're spending a ton of money. They have to make more money. When you look at Disney's, it's a hold in the quant, and the reason is the valuation. This is an iconic brand. Their PE is 20. Remember, the average on the S&P wants to be around 17 to 19. They're 20. Their forward is 18. That's better. But it's still not great. It's still high up there for a company that's not running very well. Their PEG is 1.07 for the forward. That's not bad. Their growth year over year, 2.55%. But that's good because the sector's grown at 1.8. When you look at their profitability, they're making 35% profit margin. But their free cash flow, where's the free cash flow? Levered free cash flow, 9%. That's great. Now, when you look at the momentum, it's not horrible. But in the short term, it's bad. 6 months and 3 months, you're down. Now, when you look at revisions, again, they just came out with earnings, so these probably get revised down. I just don't think that it's showing strength. And again, it's a core portfolio one. It is a core. Now, another core portfolio one that I got completely wrong. Yesterday, I said I didn't like this chart, but I wasn't selling. I was holding it. It's up 17%. Shopify soars after topping gross merchandise volume expectations. Nobody told Shopify that the consumer is weak. Somebody forgot to write the memo to Shopify that the consumer is weak. It's up 21% right now. I will tell you, I do think it's got 70 in this stock. Do I think it's got 80? That's a tough one. Right now, your 200 days, it's 66, okay? If you are in positive territory on this stock, I would say start to trim and take some profits if you are profitable. Because while the MACD is super low, the RSI has quickly, because the market just opened, got up to 63. And any reaction in the market is an overreaction. You're going to have to go above this 200-day. And when's the last time we were above the 200-day and held it? The last time we were above the 200-day was way back in March. So it's going to have to hold it. Your 50-day started to turn positive during this sideways move. It's now still negative. it's probably going to go sideways. You may get a golden cross here on the 4 hour. But when you take a look at this weekly, okay, that's where the $80 price target comes in, is because that 200-day is around it's around $80. I got to hit stop recording because it's slowing down. I don't know if it's my computer or if it's Shop Weekly. There we go. Let's just go and move to a different one. Boy, it's slow. TrendSpider's slow today. I'm going to log out and log back in. Let's log back in. Boom, boom, boom. Four-hour run. I had somebody messaged me yesterday that on the 4 hour they weren't seeing they were seeing exits but not entries. I think it's the candles. I think that's it, but he said that didn't work. I know there's a setting in there. Okay, this is slow. Yeah, if it hits 70, I think that's it. Okay, we finally got a chart up there. And we're going to go to the weekly here. And then I'm going to hit recording again. I don't know what's up. Is it my computer? Okay. Sorry, TrendSpider's lagging a little bit with the weekly chart, but here's the weekly chart on Spotify, or Shopify, I should say. You can see the 200 days, the red line. Okay, I put that $80 in there because that red line, which is the 200-day, has been moving that way. Now, I would say if you hit 70 today, get out. Get out. I mean, just start getting out, and then you can add more when you pull back down to the 60s. Because I think 70 is going to be a logically, that's where 67 is where your 50-day is. That's providing some resistance right now at 68. So at 66. So I would say, again, you want to take a look at this one. The consumer's a little bit weak. We might see additional weakness in this one. If we go and we look at the seasonality of this for the last 9 years, because that's all it's been, IPO'd for. Look at October. Look at September. August is a pretty strong month. Look at those 2 months. I would say you want to trade this one. Yes, it is in the core portfolio. Yes, I still own it. Yes, I've owned it for a very long time. But I would say you want to trade this one. Now, Lyft reported earnings. And what I want to point out is yesterday we saw a nice 10% bounce in Uber. Now, the difference between Uber and Lyft is being made clear. Lyft missed earnings. They're down 17%. Look at that dying one, okay? This is Lyft. This is a 4-hour algorithm of Lyft. If you look at a 4-hour algorithm of Uber, which is up 2%, again, they're getting the benefit of this one. It's an ugly chart, but it's regaining. I think Uber is claiming their dominance again. And I think that $64 that we just had a buy on, you'll see it in the scans. I think that's a good one. I think you're fine. Again, it's an expensive stock. They are profitable. I think this is a good one. If we look at the biggest movers of today, there's a couple. The biggest one, Lumen Technologies. That's up 45%. That's after yesterday. It was up 93%. Upstart is up 22%. Biggest losers, Supermicro and Airbnb. Shares declined 16% on Airbnb. You can read that article if you want. Now, AMD. What I want to point out is AMD prices on Ryzen 9000 processors cheaper than its previous generation chip. They are reducing the rates of their new chips. Kind of screams a little bit of, hey, we've got a little problem here. And now AMD chart, I do own AMD. I own AMD at about $100 or something. I don't want Morgan Stanley. I want AMD. I think I own it about an average purchase price of about 100, 109, somewhere in that neighborhood. I know it's below 110, and it's trading at 133. Did I get out of it at 170? No. Did I get out over 200? No. This has been a dying stock. I mean, honest to God, it's been a dying stock. It's not very good. It's super, super low. And they just had their earnings, and they slid on their earnings. So do you expect to bounce back? I would not. I would be investing in NVIDIA rather than AMD. Now, let's talk about the Mag 7. Because the Mag 7, since the big tech sell-off, they're up today. NVIDIA's up 3%. Let's see. Microsoft's up 1%. Tesla's up 1%. The S&P's up 1%. Apple down. Wasn't great. But here's where they are, okay? The Mag 7 have performed since July 31st, month to date. Alphabet down 7%. Amazon down 13%. Apple down 6%. Meta is up 4%. Buy it under 500. Buy it under 500 all day long. It will get over 500. NVIDIA down 10%. Microsoft down 4%. Tesla down 13%. That's not very good news. But I've said it before. I think we're resetting the valuation of these companies. And I think long term, anything that you buy during this downturn, I don't care what price it is, other than Tesla. Tesla is just, the valuation doesn't make sense to me. It will at some point. But again, Alphabet, Amazon, Apple, Meta, NVIDIA, Microsoft, and I would add Netflix to that. I think anything that you see in those, I think it's a buy. NVIDIA gains as Wall Street sell-off. This is a huge stock. Make no mistake, this valuation makes sense. People were taking profits. This was a huge run-up. When you see that weakness, people were taking profits. You're back down at the 200-day on the 4-hour. Your MACD is down 4 points below the oscillator. Your RSI is coming off oversold levels at 30.25. When you look at the weekly chart of this, it's resetting. Has it reset enough? The MACD on the weekly is still 15 points above, 12 points above the oscillator. The RSI is still at 56. So it hasn't reset enough. But will it reset before their earnings on August 26th? I would say buy it. This is not the death spiral of a company, okay? They will be perfectly fine. They probably will delay their Blackwell, but that doesn't mean that the stuff doesn't come in. Just buy it. It's still a good buy. If we look at this, Wall Street says it's a screaming buy. The quant says it's a hold. Why does the quant say it's a hold? Well, let's take a look at the factor grades. It's the valuation. But again, take a look at the PEG ratio. What the PEG ratio does, it takes the price, the PE, and adds in the growth. And it's at 1.05. That's 40% below the sector. I think this one's a really, really good buy. And again, we saw some upgrades. Now let's talk about XLK. XLK is one of my absolute favorite ETFs. If you're underweight tech, this ETF might be for you. I like this article. I thought it was interesting. I own a ton of XLK. XLK has performed incredibly. Let's take a look, and we'll go through Seeking Alpha, how I use Seeking Alpha to look at an ETF, because I think ETFs are incredibly important to try and to expose yourself to different sectors. And I think these spider ETFs are incredibly important. Now, the quant has it as a sell. It has it as a sell. That's not good. Now, it's up 3% today, but when you take a look at year-to-date, it's up 4%. That's not great. 6 months, you're up 1.84. Over 1 month, you're down 12%. 12% you're down. Now, when you take a look at this, and I want you, this is how you look at any ETF, you go to the holdings, okay? 22% of this is Microsoft. 18% is NVIDIA. That adds up to 40% of this ETF are two companies. This is like XLY, which 40% is Amazon and Tesla. It's the same thing. So you have exposure to Microsoft and NVIDIA. And those two companies haven't been doing great. And so if you expect a weaker one, this one might be an opportunity to actually buy into this. This will, I think it does a quarterly rebalance. They just did it in June, and that's why you're seeing NVIDIA at 18%. Apple was the number one. It switched Apple from 18% to Apple at 5%. So I like that one. When you look at the charting of this one and you look at the long term over 1 year, it's just meeting the S&P, and the S&P has more broad exposure. So again, 40% of the S&P is not based in two stocks. If you look at 3 years, though, we're beaten. If you look at 5 years, it's again greatly beating. So I would take a look at this one short term and take a look at what you want to be exposed to. If you don't have exposure to XLK, I agree with that article. Take a look at XLK because at these prices, I think over the long term, you're going to be fine. When you look at 6 months and the S&P is beating it, that's a fantastic buy in my mind because it will come up to beat the S&P. So earnings for today, I was using Earnings Hub and I was saying, okay, what do we have for earnings today? And what are good plays? Because yesterday I said Fortinet was a great play. Oh, look at that. The Shopify guy. By the way, the Shopify guy on CNBC has the best camera, lighting, and mic setup of any CEO I've ever seen. And he focused on it. That shows in detail a CEO who cares. And that's what you want in a CEO. So let's take a look. Oxy here at Earnings Hub. Oxy Petroleum reports today. 86 cents per share. They reported 63 cents last time. That's a tough one. They missed on their revenue last time. You think they're going to miss again? Warren Buffett has been buying at this price for the last year. And he has been buying hundreds of millions. He owns 25% of this company now? And he just sold Apple. If you're listening to Warren Buffett, you want to buy this. This is a stock that's in the core portfolio. And again, Oxy, I personally own. I think I own it at 60, I want to say is the average price. But it's been in a trading range for a very, very long time. Now it's just recently lost this trading range. Do you have an entry on the 4-hour algorithm? No. But I would say right before this earnings, I don't think it's a bad place to play. You're up 1% today. I think oil will be fine. I think, again, if you want a long-term buy, I would say MPLX is better if you don't have exposure to the energy space. I would say that's better because that has an 8% dividend, but this one probably has some pop in it. I would say that. Now, another one that reports after the bell, we're going to get rid of that. Another one that reports after the bell that could be interesting is HubSpot. And if you remember earlier this month, in July, Google announced they're not buying HubSpot, okay? They reported $1.68 last time. They're expected $1.63. Their revenue reported $617 million. They're expected $619 million. Okay, so it's kind of on par. The entire call is going to be about the Google purchase. But look at this revenue. That earnings per share and revenue have consistently been higher. This is a company that has been killing it. And they got beaten down because they had some valuation issues because they thought that Google was going to buy them. But now they're not buying them, and you've seen it slide. HubSpot could be a very interesting buy here. But is the valuation too high? Let's go over to Seeking Alpha and let's look at HubSpot. Again, I'm using all the tools in my toolbox. I've got the earnings hub, which is my favorite earnings site. I've got TrendSpider, which we just looked at the chart. We just saw its week. And we're going to use Seeking Alpha Premium to see what it is. Well, it's a buy in the quant. The C's, the only C's are valuation, and you're going to pay for best in breed. That's what you're going to pay for. Now, their growth, A-. Look at the PE, it's 70, okay? That's huge. The growth, they're growing 24% where the sector's growing 3%. That's huge. That's enormous. Levered free cash flow, 26% versus 22% in the sector. Now, when you look at profitability, 84% gross profit margin, that's pretty freaking good. The momentum, not great at all. Your short term, you're down 27% in 3 months. You're down 25% in 6 months. You're up 7% in 9 months. You're down 7%. So look at the price performance. That is where you want to look at. Look at that divergence between the S&P and HubSpot. It's the valuation. It's the Google buy. It was that big overreaction. Do you want to buy this one? I'd say if you like HubSpot, if you use HubSpot, if you know what it is, and you have more of an exposure to it, I don't think that's a bad play. An alpha pick that reports today, AppLovin. AppLovin is one that I have in our the daily stock pick watch list here on TrendSpider. And does it have a buy right now? No, it will, and it looks like it's rebounding right here. This one from you've got a bunch of gaps down here. It's I can tell you it's a little bit extended on the valuation. Now on the long-term weekly, you're using that $58 as support right there. This candle, this first weekly candle, it went down the low $60. Can you imagine if you bought this at $60? Now the oscillator, the MACD is super high. The RSI is at 49. Let's go over here to Seeking Alpha and we'll go and look at APP, AppLovin. There's another out and we'll go over another alpha pick. It's a strong buy in the quant. The only thing that is dinged on it is the valuation, and you can read the earnings preview right on Seeking Alpha. The PE, a little bit extended, 25 versus 21. The forward PE is not. It's 50% below the sector. You can look at the PEG. They're down at 0.64. You can look at their growth. Their growth, 24% versus the sector at 3%. Okay? Profitability, where they have 80% profit margin, 69%. Okay, sector's at 43%. This is software. Software hasn't been loved of recently. It's up 3% today. That's an interesting one to play. Another app, alpha pick, Bluebird. This is school buses. I probably shouldn't say it's an alpha pick. Okay, erase it from your mind. It's not an alpha pick. We're just going to go over Bluebird. Bluebird, that algorithm has you out. Will get you back in on the afternoon candle. It will. So let's take a look at Bluebird. Again, if you take a look at the weekly chart, we're buying into strength here. A lot of strength. The MACD super high. The RSI 58. No man's land super high. Let's go take a look at Bluebird. BLBD is the symbol, and we'll take a look at this one from the quant standpoint. It's a strong buy. Everything. Valuation, growth, profitability. The valuation isn't extended. The PE is 16. The sector's at 18. Okay. The PEG ratio, 0.56. Sector's at 1.7. It's an industrial. What's Wall Street say? Wall Street's price target, 53. Trading at 49. It's an 8% upside. Now, there's only 7 analysts that cover it, so don't expect that one to be a big one. Let's see. I've got a bunch listed here. I'll list them in the newsletter. One that I really like tomorrow. We've got Duolingo, which actually just had a cross up. So let's look at Duolingo. This first came to my radar with Brad Freeman, I think his name is, the stock market nerd. Now, average price target 250, 48% upside. It's a hold, and it's based on valuation. If they announce some really great earnings, this one could pop. This one could absolutely pop. Let's go and look at the chart on this one. Duolingo, it just had a cross up, and it's got an entry into the 4-hour algorithm because it's on the daily stock pick watch list. It's weak. You're above the 9-day though. Today you're up 1.73. They report after the bell. It's an interesting one. I'm gonna be right back. Okay. Let's see. We were on Duolingo. Frog is on the watch list. IONQ. Let's start. Okay, so Bluebird, Duolingo, Bros, Hood, Frog, Sonos, IONQ, podcast favorite, Sedge, one I've lost a ton of money on. A core portfolio name reports tomorrow, and it's an interesting one. Lily. Okay, this one is one that I said, hey, you should just buy it under 900. This one on earnings always pops. I mean, you can see the last few earnings, it's just popped right there. The reason is because Ozempic. I mean, Ozempic at this point, if you get a paper cut, they're prescribing Ozempic because you're overweight. You know, if you have the sniffles, Ozempic. It's just that prolific. Now, the valuation doesn't make sense. But if the market is that big for Ozempic and they have first mover knowledge or advantage, they're going to get it. Now, weekly, this looks extended. So the way I would do this is I would wait to see what the earnings are tomorrow morning. If you see a pop in this stock, I'd probably buy it. Honest to God, I would probably buy it. The only reason this is down is because AMZN is actually getting into it. Novo Nordisk is a competitor. There are just a bunch of competitors coming into this market. But again, if they post crazy earnings like the last two times, you can see the earnings back here in February, you jumped from 745 up to 800. And throughout that period, you went up to almost 900. So 745 to 800, that's a good move. This earnings right here in April, you were at 729 and you ran all the way up during that time to 966. Again, I like this one. Trading Desk is another one. The only problem with Trading Desk is the valuation, but I really like Trading Desk. Now, 97 has been the resistance from a long-term standpoint. 86, you're down below the 200-day. Your 50-day is moving negative. I would say if you buy this one, the cap is going to be 97. You trade it between 86 and 97. Wait until you see the algorithm's going to get you in, probably today. In fact, this one, I got to make sure this is on our watch list. Yeah, it's on the watch list. It's in there, so you can scan on it tomorrow. You'll see it. Nice gap up here between 100 and 97. I mean, gap down. And you look at the weekly on this one, the weekly still above the oscillator there. It's touching the 50-day. Everything's still moving positive. So I like this one. The only problem with Trading Desk is the valuation. And again, we'll look at this one. It's an F on valuation. It's a hold. When you look at Wall Street, they're saying it's a buy. Their price target is 103. That's 20% above where you are now. It's 20% above. So Sound, which is a NVIDIA thing. Now, I want to read the social request. This is a great email, and I'll read it out to you. It's from William. I was reading the SMCI results today, and the increased revenue plus margin miss comments seemed bullish to me for NVIDIA. The former for obvious reasons. The latter because, as they said, they had to accelerate parts of their supply chain at higher cost to meet growing demand. You listen to that call. I just had AI do it, but that's a great, William, just phenomenal analysis. I also imagine having to compete with Dell and others hurt margins. Absolutely. That's why Dell is down. Although they said that they would think they will come back to normal soon. That's where they're getting killed, is they think the margins are going to come back, but there's no promise of that. So we've heard from SMCI, AMD, and NVIDIA as a proxy, Palantir and other hyperscalers who confirmed increasing CapEx. To me, it's basically saying the AI is still on. Yes, AI trade is still on. My question is very simple. What's holding NVIDIA back? I've had a few ideas ordered from most plausible to me to the least. Curious what you think is the best mixture of an explanation. Number one, fear. At some point, accelerating demand has to slow down, and that even if it's not this quarter or the next, the runway here is short, not long. Yes. Number two, fear that revenue generating use cases won't come fast enough to keep the money pouring in. Yes. Number three, rumor and Blackwell delays. But as you said, there's a supply issue, not a demand issue. Although OFC, it would still hurt the price. Yes. 1 through 3, why is the name overvalued? 4 through 6 are macro. Number 4, macro reasons, fears. It's getting dragged down. I think it makes sense. This is, again, it's a speed bump. Number 5, it's just lost momentum as favor and become one of the zero-day DTE option plays. Yes, absolutely. Absolutely, options are holding this one back. 6, antitrust probe, Kamala admin prospects. I'd be more concerned if this weren't an enormous national security reason to let NVIDIA keep innovating. Here's the thing. I don't think it's the Kamala admin prospects because you've got J.D. Vance in the Trump trade, and you've got Trump never wanting China to get anything. So NVIDIA will never be able to sell to China if Trump's in there. So I don't think it's just the Kamala stuff. Remember, J.D. Vance's favorite person in the administration is what's her name? I forget her name. But what I'm hoping is the case is to get hit on the yen carry trade. And there's all these fears circulating about AI macro. Everybody wants to see just another big blowout quarter, again, just to feel confident before loading up again, the case get burned. If it's all true, it just seems like a great reason to load the boat. What do you think? If you've made it this far, thanks for reading. For all you do, your pod is part of my everyday system. I really look forward to it. I appreciate all the work you do. William, that is just a master class. If I've taught William, it sounds like he learned even before me. But again, that is a master class on how to look at a stock that you own. Now, what I will tell you is the market never makes sense. I think I said this in the education. The market never makes sense. It will confuse you. Why is NVIDIA down? I don't know. The valuation completely makes sense. Now, the current valuation of what they've done, it doesn't make sense. The PE is 52. That's enormous. Now, the trailing 12 months peg based on the growth, 0.08. When you add in that growth, it's 0.08. The peg going forward, 1.05. So if they don't grow as fast on the forward, and when we look at the growth, they're increasing revenues 208% year over year. Okay, the forward growth is 83%. That's all priced in. As this starts to come down, you're going to see the stock level off. And so do I think it's got 150 in it? Absolutely. When you look at this stock on the 4-hour algorithm, it absolutely is a screaming buy under the 200-day. When was the last time you had on the 4-hour algorithm a time to buy this under the 200-day? Let's go back and look. Way back here in November of 2023, stock was trading at 400. So, split adjusted, it's at 42. You've doubled your money. And so the problem is that it's just run up too far too fast. And so you've got these people who have enormous profits who are now looking, oh my God, I've got to take it down. And you look at this MACD, and the MACD is still 14 points above the oscillator. The RSI is still at 55. And it's crazy to think that it can still grow in that territory. Remember, the market doesn't necessarily care about valuation. If you run up 100% over a certain short period of time, the market will say you're not going to grow as fast as you were because as you become a bigger company, it's going to be harder to grow at 208%. Their market cap can't go from $3 trillion to $4 trillion in one quarter. It can't. Will it? I don't know. That's what's great about the market is it can't, but it will. And that's the difference that you have to make in your mind is this a comfortable price based on the valuation of the company that you're comfortable paying? If you want to go out and buy a car, that's exactly how you look at it. William, masterfully crafted email right there and masterfully crafted analysis. I don't go into that much depth typically on this stuff. I'm not looking at that stuff. I'm looking, okay, the price on this stock, it had 150 in it. It had 140 in it. I think the high, let's see, the high was 130, 132 it looks like. It's got that in it. So do I think it's going to return there? Yes. When is it going to return there? I don't know. But the valuation makes sense. And I still do think that that's a good buy. And I think at this point, I need to start adding to it once the 4-hour algorithm tells me to add to it. And if I go and I look, right now we've got strength. We've got confirmation above that. The buy here at 117, you're at 106. It got you out, hasn't gotten you back in, but I want to get back in. I just have been trying to time this one between the 122 and 140. And I said to myself, I'm not going to do that again. I'm just not going to do that again. So I'm waiting for the algorithm to tell me to get in, because the algorithm makes you 473% versus 488 if you just buy and hold. And so in my mind, I'd rather have the algorithm tell me to buy. Now, am I getting out of those ones at 122 or 120? I mean, I've got some that are down there at 300, or I'm sorry, 30 at this point. So I've got a ton of money into this already. I've got a lot above, but I've got significantly more below. I'm fine adding to this one. It's not part of my top 5. I think it probably should be part of my top 5. I've got a ton of XLK. So I will benefit when this one starts to go up. And make no mistake, at some point, this one will start to go up. It will start to turn. And there's enough people, enough professionals that I know who are wanting to take the risk and look at this. So let's see. This is John from Spotify on my comment yesterday. Curious your thoughts on Dell's drop. Is it a buy? Dell's similar to SMCI. And what they're worried about are the margins that SMCI didn't hit. They're worried that that's going to bring down Dell as well. Is it a buy? Take a look at this chart. It doesn't look like a buy right now. I think you still have some weight in this one. When you look at the weekly chart, the MACD is just starting to come down to the oscillator. It's still not there. You're back to where you were in February. Okay, I've got this one at 113. I think I've got a couple at 120. I've got a couple of lots there. I'm not buying until I see some strength. Their earnings are coming up August 26th. I think it's around the same time that NVIDIA reports. It's going to be the margins. It's going to be the margin. Is this a buy? I don't know, but I'm not buying it right now. It's now down below its 50-day. Last time you had the opportunity to buy this at its 50-day was when it broke out. When it broke out in March of 2023, it broke out and went on a 326% run, okay, over 1 year and 2 months. That's the last time you had the opportunity to buy this under the 50-day. And so in my mind, I think that's what you're waiting for as well. The valuation is not nuts on Dell, okay? It's the margins. And do we have a PC upgrade cycle going in? The revenue growth is down 7% year to date. I think you're going to see a growth spurt on this one. I think you're going to see them turn back to growth. It's an A-. The valuation isn't nuts on this. The PE is 13. Sector's at 21. I don't know why the hell the valuation's a D on this when everything's an A. I don't know. I don't know the quant, so I don't know how but it's a strong buy in the quant. It's a buy from Wall Street, and it's just turned into a strong buy. Wall Street has 23 analysts. 13 of them have a strong buy. Average price target, 160. That's 75% up. And if you don't think that they're putting in a ton of servers into Tesla's stuff, they're doing it. They're doing it. Ethan wants my thoughts on AVGO. AVGO is frustrating. This is Broadcom. It's not, this is one of Stephanie Link's favorites. It's just like NVIDIA. It's had that run, and it's getting beaten up on that run. It's back below its 200-day. The oscillator's resetting itself. You're going to have a buy probably tomorrow or something in this. It had its 10-for-1 split, and right after the 10-for-1 split, what did it do? It got brought down, and it's down below its 200-day. But when you look at the weekly, we're still extended. You're not even at the 50-day, which is 120. Okay? That MACD extended. What do I think about it? I think you're fine long-term because the valuation isn't nuts. I don't think that the valuation's nuts based on the current trajectory. Now, Wall Street says it's a strong buy with a $192 price target. That's 31% above. There's 41 analysts that cover this. That's a lot. The valuation here, again, 33 PE. That's well above the sector median 21. The PEG, it's a little bit extended at 1.68, but the sector's trading at 1.76. So do I think it's a buy? I think you wait for some of this to shake out. Again, when you look at the seasonality specifically in Broadcom, you see September's just weak. So if you're holding this, I'd say, continue to hold. And you buy on the bounce. The mystery broker, go back to the mystery broker. It's a short-term bounce that he's buying on. He's adding to that. This is why Buffett took some cash. I think he's probably buying through this weakness. Kyle from Spotify asked me to look at SYM. What is SYM? Symbotic? I don't know what Symbotic is. Let's take a look. Was it a SPAC? Because that looks like a SPAC to me. 23. That's an ugly chart. There's nothing in this one that I would even want to look at without knowing it. And that's a SPAC. That's a SPAC. I'd stay the hell away from it, to be honest with you, Kyle. Let's see what if it's covered or anything like this. It's sell. Symbotic here. Trade it. I mean, it's in danger of performing badly. Let's see why. It's the momentum. It's the momentum and the profitability. They're not making money. This makes no sense. Again, trade it. Trade it if you want it. But I don't think this one's a good long-term buy, Kyle, to be honest with you. It's just not something that would fit in. Let me see. What do they do? Automation technology company. Technologies improve operating efficiencies in modern warehouses. It's got a $13 billion market cap. Not bad. But it's a SPAC. I just don't trust SPACs. I just don't. The 52-week range between 21 and 59, and you're trading 23. If you don't think that that's coming down. Wall Street says it's a buy, though. You have 16 analysts that cover it. Price target is 42. So you can take a chance on it. I just don't think it's worth it. I'd probably trade it instead of actually owning it. Titus, can you talk about LTH? What is LTH? This is Lifetime Group. Lifetime Group Holdings. Let's see what they are. It's got a market cap of, it's pulling up now. Market cap of $4.7 billion. That's pretty small for me. Provides health, fitness, and wellness experiences to a community of individual members in the United States and Canada. Primarily engages in designing, building, and operating of sports and athletic stuff. Wall Street covers it. Let's see. The 12 analysts. Their price target is 26. That's a 7% update. Quant has it as a hold. It was a strong buy here for like a blip of a second. Valuation, it looks like the PE is extremely extended. PEG, not bad at 1.17. Profitability is a D. They're making 46% margin, but that levered free cash flow, that's where they're getting it. It's probably, if they're building buildings, that's a high capital, stuff. Momentum, A+. It's ranked number 1 out of 9 in leisure facilities. Let's see. Some of the others are Six Flags, Planet Fitness. It doesn't have a great quant score. And this, with the kind of consumer, I don't know. I mean, I don't know anything about this company, LTH. Let's take a look at this one from a 4-hour standpoint. The 4-hour algorithm on this one, it probably has you in based on that one. It makes you 86% versus a 68% buy and hold. Titus, I would probably tell you to get the 4-hour algorithm if you're going to do this, because I don't know, a capital intense business is probably going to do very well under lower interest rates. So as you start to reduce interest rates, this one probably is going to do perfectly fine. But am I buying it at 24 when the algorithm told me to get in at 14? The algorithm's average win is 27%. Okay, over 24 months, you have 29 positions. So it's just about once per month, okay? Your average win is 27%. Your current run is 74%. There's no way I'm buying into that strength on that one. No way I'm buying into that strength. I'm basically going to trade this one if I'm going to trade, but I'd be looking for this one to pull back to probably 20, maybe 18, somewhere in that neighborhood. The valuation isn't nuts, but it's probably a good one, just probably not my thing. Lily, we're going to talk about scans. Lily got a screaming buy before earnings. I do think that you wait for earnings on this one. And if we see it pop over 800, I think you get back to 900. But again, the valuation is what that one's probably parting. Uber. We have a buy on Uber at, it's up another 4% today. This is after 10% yesterday. Another buy on Uber. You're just getting back to the 50-day. Your 200-day is going to provide some resistance. You can see it clearly there. Your 200-day at 69 is going to provide some resistance. I own Uber. I'm not buying it right now at 64. It said to buy. Am I buying it right now? No, I'm going to look to trim at 69. I'm going to look at that 200-day as being a resistance level. The 50-day is still moving negative. So until that one starts to move positive and we look at weaker, I mean, take a look at this, over 5 years, because that's how long. Look at this. I mean, it just has not had a good September and October. So I'll be looking to get out of my position around 69. It's at 67, almost 68. I'll probably be trimming that one pretty well. ASML, we talked about, it's beaten down after earnings. Below 50-day, they are, did I talk about this one? I don't know. ASML is another chip company. Oh, I don't want that one. I want ASML. I pulled up the wrong one. ASML. Yep. This is a chip company that has been beaten down. I think it's one of Stephanie Link's favorites, and it's under its 200-day at 858. It got a cross up there. You're at 870 today. You're up 3%. You take a look at the seasonality for this one. Last 15 years, this is the worst month. So I would say you buy it during this month, and then you look at September and October being pretty fairly good months. So again, the algorithm makes you 41%. You make 49% if you buy and hold. Probably not a bad risk for me. Again, they're past earnings. This one, once you get confirmation above there and you've got it at 870, you got some gaps that you need to fill here. Specifically, this one between 984 and 1,000 might not be a bad one. ASML, remember that one. So if you have any questions, hit me up. That's it for today. Sorry about all the start and stop. There are going to be some edits there. But if you have any questions, hit me up. Remember, TrendSpider, Seeking Alpha Premium, and Alpha Picks right there. And if you want Webull, you can get Webull. But the big thing is the newsletter. Sign up for the newsletter there. It's free. It costs you nothing. Okay, take care. See you. Bye. No, I didn't take Netflix out of the core portfolio. It's still in there. It's just not part of the Magnificent Seven. It's still in there. Shopify is at 67. Oh, shit. I got to run. Tesla's here to start my stuff. Okay. I'll talk to you soon.